GTii, we're at that make or break for these next following days. Let's go ahead and find out exactly what I mean within this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTii technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. But with that said, let's go ahead and dive right into the charts. Okay, so make or break within the next few days is this. Okay, so we are in what's called an accumulation period according to Wyckoff theory. So, and this accumulation period is a combination of two things within the Wyckoff theory. Actually, there is what's potentially a terminal shakeout here, which would be something like this with high volume, and also this reaccumulation period after an uptrend. So you can see that it looks like we're in this massively pensive range here and potentially making this decision within the interim. So this is a bi-daily chart. So do know that these candles do take time to close. Okay, so in this case, the terminal shakeouts usually lead into a quick recovery and then the ascent. Okay, so it's not to say that there isn't going to be like one more candle to test the bottom like this. This is an averaged implied path, so we do have to be careful with those types of things. But in this case, Wyckoff theory does have a bearish outlook for the uptrend, accumulation, then distribution. And they do, and as you can see here, they do have the bullish outlook after the uptrend, reaccumulation, and then, reaccumulation, right? And then a massive distribution after a massive upside. So let's go ahead and move on to the next chart. I just wanted to show you this here because there are several theories backing what could potentially be happening here. Now, do remember that these areas here are usually made by institutions to literally shake out long positions, right? In the event to where something to the upside may happen. So they wanna just catch their liquidity before something else makes them lose even more. Okay, so now let's go ahead and move on to the next chart. This is also part of the make or break. Yesterday we did mention that we didn't want to close this 5-day candle below the newly converted resistance into support. So now we have reclaimed the channel and it is a form of resistance once again. The reason why I'm bringing this up right now is because there is a sense of hopium within this area. Now, I don't usually like to present hopium because it never really matters. But in candle analysis, there is something playing out here that may actually help us in the longer term. So this candle here, obviously, it just started. So we do have about 5 days, 23 hours left in the closure of it. But in this pattern in which this is building, this is usually the area before a reversal. Okay, like for example, this is a bullish hammer. Okay, at the bottom of a downtrend. Of course, anything can happen within the next 5 days, but if you can see, like right over here, you get the hint of bullish hammer. You get another hint of a bullish hammer, which looks just like this one right here, and then the trend happens. Okay, we get a downside right here, then a bullish hammer print, then we get that upside. So usually, when you start to see hammer candles or even inverted hammers in the lower side of the spectrum, similar to this, you get the long wicks to the bottom and recovery to the upside. So these are usually pretty bullish candles that can lead to a pretty good reversal to the upside, considering its size. Okay, so now let's go ahead and move on to the next chart. Okay, so just a reminder for everybody. This is regarding the statistical analysis for GTii. So this candle still has. We're on the 3-day chart here. Okay, so we are still about 22 hours 47 minutes to close this candle here in the 3-day chart, which would it's starting to look like it's starting to look like it's rejecting any more downside. Okay, but we can't just call that yet because we do have to consider what we're looking at within these indicators. Okay, so remember, I have back tested the momentum oscillator, which is this indicator here, I have back tested it in GTii, particularly in the 3-day chart, and in guessing the direction of the asset. Out of the total 11 iterations throughout the 3-day chart, throughout the entire trading history of GTii, it has gotten 10 out of 11 correct, giving us pretty much a 91% move in guessing the, I'm sorry, a 91% accuracy in guessing the asset's direction. Okay, so it is currently still suggesting the downside, but do remember that this is a 3-day chart, and it really does take some time for this to move. Yesterday we were talking about the pivot that volatility represented by this indicator BBWP was making. So now we can see that kink, and it's starting to per se change its direction. So as soon as it starts to imply that a contraction phase may be beginning, it should line up with the stochastic momentum oscillator into making that pivot to the upside as well. We also made that we also talked about that just yesterday. You can see here that, let me just go ahead and remove this line for now. And you can see here that we have that kink. Okay, so it is aligned with volatility. Now, volatility, the reason why I'm pairing it with stochastic momentum is because volatility is direction neutral. So we would need a momentum-based oscillator to guess or to give us a bias for direction. And in this case, this indicator in particular has a high hit rate in GTii in guessing that direction. So we are incredibly oversold. We are already within the critical volatility zone, which is anything above this 90 percentile here. Now, the statistics, I guess I'm going to repeat it for the new viewers, but the statistics do show, based on a back test of volatility versus momentum profile throughout the entire trading history of GTii, we have a total of 11 iterations to where anytime that we have reached the critical volatility zone and started a contraction phase to the downside alongside stochastic momentum making the upside, we have had 7 guesses to the upside correctly out of those 11, giving us an averaged upside accuracy of 68.63% with an averaged upside thrust of a magical 3,200% to the upside over the span of just over a month. So please know that we are absolutely resetting the conditions for this upside move to fulfill itself. And the conditions are these, just to make sure that everyone is in the same page. The volatility component from BBWP is this spectrum line. The moving average is this one right over here. So we need both of these averages to be beyond the critical volatility zone and pitched to the downside. Okay, just similar to this line here. And aside from that, we also need the stochastic momentum oscillator to correct and make its ascent. So as soon as we start having this contraction versus expansion of volatility versus momentum, the metrics of the upside averaged 3,000% can be applied. So if we do not meet that criteria, or if we do not set those conditions, then we are absolutely going to invalidate this entire move. Okay, so the reason why it did come out to 3,000% is for a few reasons. Throughout the back test, there are several iterations to where the asset has made massive gains. For example, here this was a 305% move to the upside. This was a 1,000% move to the upside. This was another 300, and this one here in particular is about a 19,000% move to the upside. So in gaining the statistics for an averaged mean of all of these iterations, here's another 1,600. The results came out with this figure as an average statistic, and it's not a certainty. Please do know that. Okay, so let's go ahead and move on to the last chart and see what we have. So yes, we do still have several drives of hidden bullish divergence here, and it is still suggesting upside after. There's this. Look at this 12-hour candle also printing that hammer at the very bottom. So, and in closing this candle, which is going to be tomorrow, this would then confirm another couple drives of hidden bullish divergence, which usually happens in the opposition of price action versus momentum. So in this case, you are looking at a series of higher lows in the price action like this, and you are looking at a series of lower lows in momentum, which is indicated by this RSI indicator here. So you are making those lower lows. Yeah, so upon this closure, we just have built another set of drives of bullish divergence. So there is serious loading happening for GTii. But I do need to express warning that we are in thin ice now, and we are in this accumulation period and at the breaking point of it. But the breaking point doesn't mean tomorrow. Please know that, okay? The breaking point is relative to a 2-day chart. So when you're looking at a 2-day chart and looking to make a move like this, it can usually take weeks. Okay, so do know that I am expressing urgency is because I look at the macro perspective and look at the health of the asset based on a larger, a wider view. You know, there's a little too much distortion or too much grain when you're looking at something accumulate in smaller time frames like a 4-hour or a 1-hour, you know, or even a 30-minute. Don't ever talk to me about a 5-minute too much. You know, I don't really follow those time frames as they are too distorted with grain. Okay, so yeah, now let's go ahead and just take a look at the immediate short-term time frame RSI, as there could potentially be some warning shots there as well. Okay, so let's go ahead and load the 30-minute here, and also let's bring up the diagram for the RSI properties for the new viewers. So these 4 zones are the 4 zones that I need you to focus on. 1, 2, 3, 4 are located right over here, and every other RSI as well, of course. So the immediate short-term RSI 30-minute time frame did absolutely reject the oversold percentile. It has since, for the first time in a while, made its first cross over the moving average represented by the pink line. It's very bullish. Okay, so in this case, we are sitting in the very shallow areas of the bear strength percentile, which usually means, just like when we were up here today, when we're in the shallow areas or the deep areas of either zones, that usually means sideways trading and or rejection or acceptance of each other. Okay, so of each of the zones, I mean. So now the bi-hourly chart is suggesting a continuation onto the upside, and as you can see here, there's been several iterations here to where we have been under the moving average for quite a while. This now is suggesting a potential bullish cross over the moving average, and it has since recovered from oversold, and it has now jumped into the deep areas of the bear strength percentile. So there's also the likelihood to where we can use the moving average as a form of resistance before a continuation onto the downside, but we definitely need to verify that live. We cannot just guess that at this point. Okay, so now the 6-hour RSI is suggesting a continuation onto the downside. It is critically oversold. There are iterations to where we've gone to lower areas on the 6-hour RSI, which is in accordance of what I'm telling you about this potentially not being the final. This potentially not being the final test of the bottom. It could happen one more time before a continuation up. It's just price action. That's usually what happens. Okay, now the 3-day, and we're going to look at this 3-day because this is interesting. This we were looking at it, I believe yesterday, and the 3-day was still suggesting an aggressive downside, but the kink has since come in. And this kink is now slowing down the sell pressure, and it's well within the shallow areas of the bear strength percentile here, which usually means that we can face a rejection to the upside, which the 3-day RSI is in accordance with the 3-day candle that we are looking at right over here. So let me go ahead and show you that, which can be closing in 23 hours and 37 minutes. So there is a potential to where we can recover some more, close this candle as an absolute bullish hammer, which is also being seen in the 12-hour chart that we looked at earlier, and continue our ascent. So remember that we have noticed that there's a kink here. We have noticed that there's a kink here, and we are noticing that there's now a kink here. So there is some type of pressure relief thus far. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave those links in the description below if I didn't say that. Sorry. But yes, I think... yeah, you know what? This is definitely it. I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.